Good morning, fans. Privateer FX coming at you 21 September. It's Monday here. Calendar's pretty light. We got some reports out of the Bundesbank midday today. There was a time when the Bundesbank was the most powerful central bank in the world, sort of neck and neck with the Fed there for a while. Now they've been relegated to the minor leagues, so it probably won't mean too much for Euro, but as an old timer, we still like to watch that shit. Powell's also speaking at 4. Not really sure what he can say. He's probably going to try and clean up his FOMC performance, maybe take a little bit less medication, or I don't know what happened last time, but that was a disaster. So I'll be interested to see how he turns out and turns up. So 4 o'clock today. Probably give a listen to old Powley. As far as the charts and prices are concerned, I was thinking a lot this weekend about whether we're going to get this huge dollar sell because of budget deficits and just debt to GDP in the dollar. If we're going to have this crisis of confidence in the dollar, there are a few signs that point to that. Obviously, Buffett putting all that money to work in Japan. There's a currency element to that trade that you need to sort of keep your eye on. The last time he did this, I think it was around 2003, 2004, he just went into the derivative market and sold the crap out of the dollar. And that was based on trade deficit. And a lot of those elements are in play now that were in play back then. Trade deficit got smashed. Obviously, budget deficit sucks. Debt to GDP is like abracadabra, you're fucked. Especially the GDP element. We know the debt element is increasing massively, but the GDP element is the real question. And if you just look around in the big cities of the world, and if you look around anecdotally in America, obviously I live in Europe, so the information I get is secondhand. I just wonder how much production there's going to be. Restaurants, hotels, job cuts, less gas being bought, less travel. I don't know. I feel it. It just looks like on paper GDP has to be a disaster in the next 12 months. So there's that side of the trade, and the other side of the trade is if we'd have this massive risk-off moment, then there'll be a drive for safety. Ironically, safety typically means dollars. And safety is probably the wrong word for it. What it basically means is liquidate everything and put it back into currency. And since there's a huge amount of stuff out there in dollars and huge amount of risk out there in dollars, it goes into dollars and stays into dollars. And you get like a dollar safe haven trade. So you get two elements to this. Euro has been teasing us. We traded up to 119 last week, and then we had the mysterious sort of miracle offers. Right up here. This is the hourly chart. Let's go to 4 hours. It's better. And then we were sort of shitting the bed there post FOMC. We took out some weak longs through this line here and through these lows. We talked about getting ready for the big trade 117.10 or 117 the figure. This is still a massively important level, although now 150 points away. There's your downside level. And I think topside, even if you do think things are going to go a little risk off, you just have to trade price here. Through 119, we have to get involved, and through 119.19, we will also get involved with the idea that the story is for a weaker dollar on so many levels, and the stronger dollar story is just an emotional story. So anyway, we just have to be ready for both. And I guess that's what I'm saying as I'm talking out loud, which is half the reason I do these stupid calls. You got to be ready for both. So going into like seasonally the worst month for risk, we're going into the last 40 days before an election. Should be bumpy. So let's look both ways. Enough said on that. 119 the figure, top side, 117.10 the downside. These are the levels in euro. Cable, I mean, careful. If you're a news junkie and you like bashing your head against the wall with like false dawns and fake quotes, or I don't know, this is a news-driven sort of Brexit-y trade now. You could just leave a stop at 130.60. I'm sorry, 130.40. 130. These highs here are 130.35, 130.40. You could just leave a stop up there, and then when it gets done, or if it gets done, see what's happening. It's likely to be news-driven. And if it is done, you might be in a situation where it's 90 bid. But be careful with cable. Really, really dicey liquidity, dodgy headline type stuff. Think about sterling yen last week. 135.50s were amazing. It's 100 points lower, and then like one weird headline in a market that's short. The script gets flipped. Dollar yen looks very trendy right now, as in this is trending lower. Does not go up well at all, goes down pretty well in a sort of tortoise type of way. 104.20 is the low from August. This will be an interesting point. 26 was the low today. This looks like it's trending lower. No coincidence that I think there's no coincidence that Buffett bought all those Japanese stocks, and since he has, we've gone straight down. Dollar yen looks like it's trending lower. Euro yen now in the middle of nowhere. Last week was a Euro yen week. Who would have guessed that? I certainly didn't. 123.30 the low from last week. Sterling yen, just avoid it. These two bars here tell you why. We just talked about it. Bang, lower. Bang, higher. Everybody's fucked. Dollars are a bit of a conundrum as well. We were ready to smash the crap out of this last week for when the South African Reserve Bank decision was on tap. We thought they were going to cut. They did not cut. And so now we're just sitting here dicking around. If the dollar goes massively lower and it's not really risk off, this can go lower. We will not buy South African Rand at these prices. I know we're supposed to look both ways, and we generally do look both ways, but this is now, I think, a little bit silly. That said, we're not going to fade it either, because we know price can do funny things, especially in emerging markets. Dollar max, same 21.17. We talked about it all last week. Still the same point. This is a weird one here. Aussie higher. I didn't even look at the releases, if there were releases last night. I know Japan was on holiday. Not sure why Aussie is higher, but we're watching this trend line here. This is sort of a risk off type setup scenario. But if the dollar does get slammed, and again, if stocks do not get slammed, which they had every reason to get slammed on Friday, and they bounced pretty well through very key levels. We'll get to that. Aussie could go higher if the dollar goes lower. So this one, you do have to just look both ways and be prepared, and just watch your levels and watch the story at large. 73.45 is interesting on the top side. Downside is this trend line. Aussie yen, Kiwi yen, same type trades. We've been playing the downside on this. We talked about selling up at 20 on Friday. That was a good little bingo number, wasn't it? Just a tactical trade. This is in sideways motion, trying to decide. The nice thing about this is the dollar yen side. If you're short this, the dollar yen side helps carry this trade lower better than higher. CAD, middle of nowhere. Not sure what to do with that. Gold, also middle of nowhere. This is basically sort of trending with the euro-dollar chart. We do know 1910 is important. We're going to get short through 1910. We do like gold higher in general, but the market is incredibly long gold. A lot of, I would say, weak hands own gold and don't really understand the liquidity in gold. ETFs, this kind of stuff. So 1910 will be worth a risk managed shot, which bleeds into 1875, probably the same day, right? What you're hoping for is 1910 given, some cathartic sell. We dance around 1870 and then a puke to 1830, where there'll likely be very strong hands buying down there at 1800. So we don't think gold's going to zero, but this chart lends itself to a downside. You see lower highs, lower highs, lower highs, sideways motion. Watching 1910. On the top side, it doesn't really get interesting until we're back through 2000. So let's just see how this goes. Although that said, just looking at this, there'll be quite a few people who will have this drawn, which is sort of short term, but maybe of help tactically. What else is there? Yes. 95 was this low here from the 8th of September. We cruised through that late Friday down to 80. Opened on a gap down today, down to 96. This chart is delayed. It's actually trading at 04 right now. So sort of dancing near this 95, 98 level. In the cash, during the cash session, prices below 98. We'll try and be short. Prices above 98. The long side is in play, but we'll be a little bit skeptical, a little bit tentative, just because of seasonality on the long side. Bitcoin, not doing much. It's Monday. Buy a little bit of Bitcoin, dollar cost average. That's what we do. And we'll see. Tactically, nothing much to do here. We did trade up to kind of 11,200, which is now kind of a pivot. But Bitcoin's, tactically, it's very hard to trade. So I would say avoid that. Where's our pal ZB? Where is she? There she is. Kind of a funny week last week. This bar was a little bit of annoying. 177.15. Just want to be core short this. Looks like we're going to do some sideways stuff. Check your auction calendar. This is deciding where it wants to go, but we think it's going to continue lower. Take a look at the dailies. More importantly, I guess, take a look at the yield. sideways here, up through 53. We'll take a visit, I think, to 77. Trading at 1.45% yield on the long bond. It's idiotic. But yet here we are. We like short ZB, and you just want to quietly sell high ones is basically the way we're going right now. And as we approach this 153 level, we might get aggressive and start selling low ones in the futures market. Not much else to say. Said a lot for a Monday. Holy shit, 15 minutes. Sorry about that. I'll just shut up now. Powell talking today, and then we just watch price, see how things go. Good luck out there, people. Ciao.